If you were born before 1966 and you're receiving Social Security, retirement income, or other federal benefits, I want you to pay close attention to your bank account before the end of 2026. There are 3 important banking and payment rules you should understand because the way your money enters your account, the way your account information is verified, and the way your deposits are protected can all matter more than you might realize. Now, let me make one thing very clear right from the beginning. There is no official rule saying that every American born before 1966 is going to lose their Social Security money or have their bank account frozen simply because of their age. That's not what this video is about. The real issue is that if you're an older American, you may have spent decades building your retirement savings, and a small mistake involving your bank account can create a surprisingly large problem. So today, we're going to walk through 3 things you should understand before 2027, what they mean, and what you can actually do about them. The first rule you need to know is about direct deposit and changing the bank account connected to your Social Security benefits. If your Social Security payment is deposited directly into your checking or savings account every month, you should know exactly which account Social Security has on file. This sounds obvious, but think about how many things can change over several years. You may have switched banks, opened a new checking account, closed an old account, refinanced your finances, or simply decided that another bank offers better rates. Maybe your spouse opened a joint account and you started using that instead. Maybe you moved your money from one institution to another and assumed the Social Security deposit would automatically follow. It doesn't work that way. If you change banks, you need to make sure Social Security has the correct information. SSA specifically provides a service for beneficiaries to update direct deposit information so monthly benefits can continue arriving on time. And this becomes especially important because Social Security has strengthened identity verification requirements around direct deposit changes. The agency introduced stronger identity proofing to help protect beneficiaries against fraud, particularly criminals attempting to redirect someone's benefit payments to a different bank account. In other words, changing your bank account connected to Social Security isn't something you should treat casually. If you're planning to move your Social Security deposit to a new bank before 2027, don't wait until the last minute and don't rely on a random person who calls you claiming to work for Social Security. Use your official My Social Security account or the official Social Security channels to make the change. There is another important point here that many seniors don't realize. If you are simply continuing to receive your Social Security payment in the bank account already on file, the stronger identity verification procedures do not mean you have to suddenly prove your identity every month just to receive your normal payment. The identity verification requirements are particularly relevant when you are trying to make certain changes, such as changing direct deposit information. SSA explains that beneficiaries can use a personal My Social Security account for identity verification and online services, while other options exist for people who cannot complete the process online. So if your bank account is correct, don't panic and don't make unnecessary changes. Now, here's the mistake I want you to avoid. Never close your old bank account immediately after requesting a Social Security direct deposit change. Give the new arrangement time to become active and confirm that the Social Security payment has actually arrived in the new account. Imagine that you close your old checking account because you're moving to a new bank, but the next Social Security payment is still directed toward the old account. You could end up spending hours trying to figure out where your payment went. So if you're changing banks in 2026, treat the transition carefully. Verify the new account, confirm the deposit, and only then shut down the old account if you're certain you no longer need it. The second rule is one that becomes especially important if you keep a large amount of retirement savings or cash in bank accounts. FDIC deposit insurance has limits. This isn't a special rule for people born before 1966, but it can become much more important as you get older because many retirees gradually move more of their wealth into cash, CDs, savings accounts, and other bank deposits. The FDIC generally insures deposits up to $250,000 per depositor per FDIC-insured bank for each ownership category. That means you shouldn't simply look at the total amount of money you have and assume every dollar sitting in one bank is automatically protected regardless of the account structure. For example, imagine a retiree has a large amount of money spread between checking and savings accounts at the same FDIC-insured bank. If those accounts are owned in the same ownership category, the balances may be combined for insurance purposes. FDIC explains that single accounts owned by the same person at the same bank are generally added together and insured up to $250,000. This is why seniors with substantial savings should understand not just how much money they have, but how the accounts are titled and where the money is held. And joint accounts have their own rules. FDIC explains that joint accounts can receive separate coverage under the joint account ownership category, subject to the applicable requirements. So if you're married and have a joint checking or savings account, don't automatically assume that the rules are identical to a single owner account. The ownership structure matters. If you've accumulated significant retirement savings, this is one area where spending a few minutes reviewing your account structure could be worthwhile. Now, I want to be very careful here because there is a dangerous misunderstanding online about FDIC insurance. Some videos tell seniors, never keep more than $250,000 in a bank, as if having more than that automatically means the excess money disappears. That's not how FDIC insurance works. The $250,000 limit refers to the standard insurance coverage under a particular ownership category at an insured bank. It does not mean the government automatically takes money above that amount. The important question is how your deposits are structured and whether they fall within applicable insurance coverage. If you have a large amount of cash, ask your bank how your accounts are categorized and use the FDIC's official deposit insurance resources to understand your coverage. This matters even more for seniors because retirement planning often changes after age 60 or 65. You may sell a home, receive an inheritance, move money out of an investment account, cash out a CD, or temporarily hold a large amount of cash while deciding what to do next. Suddenly, an account that normally contained $20,000 might contain $300,000. That's when understanding deposit insurance becomes much more important. Don't make a financial decision simply because someone on social media told you that one particular bank account is safe. Check the actual ownership category and insurance coverage. Now, let's get to the third rule because this one is connected to fraud protection and suspicious activity involving your bank and benefit payments. If you are receiving Social Security, you should be extremely careful about anyone who contacts you asking for your bank account number, routing number, password, Social Security number, or verification code. This isn't just general internet safety advice. Social Security has specifically strengthened identity proofing procedures because direct deposit changes can be targeted by fraudsters. SSA has also implemented measures designed to help verify bank information and prevent fraudulent direct deposit changes. Imagine receiving a phone call that says, "We're from Social Security. There's a problem with your bank account, and your payment could be delayed unless you verify your information right now." The caller may sound professional. They may know your name. They may even know approximately how much your Social Security payment is, but that doesn't mean they're legitimate. A scammer doesn't need to steal your entire bank account immediately. Sometimes the goal is simply to obtain enough information to impersonate you or redirect a future payment. This is why you should never allow a caller to pressure you into making a financial decision immediately. If someone calls and claims there's an emergency involving your Social Security payment, hang up and contact the agency through an official number or website yourself. Don't use a phone number provided by the caller. Don't click a link they text you. Don't give them a one-time verification code. And never give a stranger remote access to your computer because they claim they need to fix your Social Security account. Your My Social Security account can also be an important part of protecting your information. SSA says beneficiaries can use the account to manage direct deposit, review benefit information, update certain personal information, and access other services. If you have never created your account, consider doing so through the official SSA website rather than waiting until you urgently need to make a change. Having secure access to your own account gives you a way to review your information instead of depending entirely on phone calls or third parties. There's also another reason older Americans should review their banking information before 2027. Electronic federal payments are becoming increasingly important. The Social Security Administration announced in 2026 that federal benefit payments are transitioning fully to electronic payments, with direct deposit and the Direct Express program among the available options. So, if you are still relying on an old payment method or you're unsure how your federal benefit is being delivered, this is a good time to understand your options. If you already receive your Social Security benefit by direct deposit, again, you generally don't need to change anything simply because electronic payments are being emphasized, but you should know which account receives the money and make sure the information is accurate. SSA provides online tools for eligible Social Security beneficiaries to start or update direct deposit information. If you receive SSI rather than retirement, survivor, or disability benefits, the process can differ, so use the instructions that apply to your specific benefit. Now, let's put these three rules together. Rule number 1, know and verify the bank account connected to your Social Security payment. Rule number 2, understand your FDIC deposit insurance coverage if you keep substantial savings in bank accounts. Rule number 3, protect your bank and Social Security information from fraud and never make a direct deposit change because of an unsolicited call, text, or email. None of these rules mean that everyone born before 1966 is about to lose money. Instead, they are practical financial checks that become increasingly important as you approach or move through retirement. And here's your simple 2026 checklist. First, open your latest bank statement and identify the Social Security deposit. Second, log into your official My Social Security account and review your direct deposit information. Third, if you recently changed banks, make sure the change was actually completed. Fourth, if you have more than $250,000 in deposits, don't panic, but review how your accounts are structured and understand your FDIC coverage. Fifth, check whether your account has another person listed as a joint owner and make sure you understand what that ownership actually means. And sixth, if anyone contacts you unexpectedly about your Social Security bank account, stop and verify the request independently. One more thing. If you have a spouse, adult child, or trusted person helping you manage your finances, talk to them about these steps. Many seniors don't personally manage every online account anymore, and that's completely understandable, but you should still know the basics. You should know which bank holds your money, which account receives Social Security, and how to contact the bank and Social Security if something goes wrong. Financial independence doesn't necessarily mean doing everything alone. It means understanding what is happening with your money. So, if you were born before 1966, don't let the headlines scare you into thinking there is some secret rule that automatically takes your money away. The smarter response is to use the headline as a reminder to check what actually matters. Your Social Security direct deposit should point to the correct account. Your retirement savings should be held with an understanding of applicable deposit insurance limits. And your personal and banking information should be protected against increasingly sophisticated scams. The most dangerous financial mistakes in retirement are often not dramatic. They can be small things that go unnoticed for months, a bank account that was never updated, a large cash balance that wasn't properly structured, or a scammer who gained access to information because someone responded to one convincing phone call. The good news is that these are exactly the kinds of problems you can reduce by being proactive. Before 2027 arrives, take a few minutes to check your accounts. Don't wait until your Social Security payment doesn't arrive. Don't wait until you've accumulated a large uninsured deposit. And don't wait until a scammer has already obtained your information. Check now, verify everything through official sources, and keep control of your retirement money. And remember, the information in this video is general educational information, not individualized financial or legal advice. Banking, FDIC coverage, Social Security, taxes, and retirement rules can depend on your specific circumstances. When you're dealing with a large amount of money or making a major account change, verify the details with the Social Security Administration, your FDIC-insured bank, or a qualified financial professional. If you receive Social Security and this video helped you understand what to check before 2027, share it with another senior or family member. Sometimes a 5-minute conversation about a bank account can prevent a much bigger financial problem later.